today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
As you just heard, it is Chuck, Mike, and Tucker with you, and we continue through
the most boring week in finance of the year.
Turn us off, don't listen, nothing happened yesterday. There was no Fed press conference, there were no earnings from Meta and Microsoft, there was no GDP report, there is no PCE report this morning, there is no jobless claims this morning, there's not going to be an Apple or Amazon earnings report after the bell today either. It's all canceled on account of the first rain that the New England region is getting in 12 weeks or whatever the heck it is. Remember we went through that thing where it rained every Saturday for 4 months straight, and now it hasn't rained at all for 2 months.
So we got to complain about both?
Yes. Yes. It's kind of like when the interest rates are too damn high and too low at the same time. How do we get them just right? Let's start, not with interest rates, but quite honestly, what happened after the bell yesterday, it was just wild. So I'm sitting there, and normally you hear okay, earnings are going to be after the bell, and you always kind of wait around because they all have their own little cadence. You know that Apple always likes to wait until 4:30 to put theirs out. Amazon's usually pretty prompt. And with Microsoft and Meta, it can vary. It was 4:01, and I get the alert coming from CNBC. I'm let me take a look.
If I had these earnings, I'd be telling you at 4:01 too.
Exactly, because both of these stocks were up 10% after hours yesterday, Meta and Microsoft. And as we sit here today, Meta is now up over 12%, while Microsoft has given back a decent chunk of its gains and now is up just a mere 5%, which, by the way, is $200 billion.
Does that still put them in $4 trillion? Yeah, it does. $4 trillion company territory.
So just some monster numbers here. And I want to give this a little bit of scale, just to put this in perspective here. And this is from Brent Donnelly, who's someone who I cite fairly often. He's a trader, and I just think gives some good perspective on this. Brent's Canadian, which is why this is his statistic.
Got it.
Microsoft's fiscal 2025 profit is the same as all of the profits of the 50 largest companies in Canada combined.
So let's think about some of those. Toronto Dominion Bank,
TD
RBC,
Bank, Bank of Montreal,
Shopify, not a small company,
Suncor, Enbridge, Manulife, Imperial Oil, Royal Bank of Canada. I mean, you're talking just big companies.
Yeah, names that you know even as an American.
Microsoft's fiscal 2025 profit is the same as the profit of all 50 largest companies in Canada. He sums this up better than I ever could have. The Mag 7 flywheel is so big, I'll make the case that it shouldn't be the Mag 7 anymore. We'll discuss that in a minute. Is so big that it completely dwarfs anything in the real economy anywhere. Until the AI capex peaks, it kind of feels like nothing else matters. The rest of the economy is a rounding error as far as profits are concerned. And this kind of sums up my feelings this morning, because for the last week and a half or so, we've been getting earnings that have been coming out, and by and large, the earnings have been okay. They've been good, not great.
Yeah.
But companies have just been getting punished because, hey, tariff impacts from this, profit impacts from that. Like, it's just like...
Whether it's Procter & Gamble, General Motors, Ford,
UPS, like you go down the list. Bunch of other semiconductor companies that have gotten whacked like all along the process. It's just been a really messy couple of weeks broadly for earnings, or at least performance of companies after earnings. And these two come out, Microsoft and Meta, and combined add $400 billion in market cap in a single day. And you're kind of like, what gives, man? Because the economic data that we've been getting, again, is fine. It's not really showing anything horrible in the U.S. economy. There was a modest slowing in the first half overall, but hiring data has gotten better in the last month. And so the labor market seems to be finding a bottom potentially and maybe improving a little bit. We are seeing inflation data worsening, so that's, a little bit concerning, but it's not crazy. It's nothing that's nuts. And so you kind of look at this and you're like, okay, the real economy is fine. It's not doing great. It's not doing terribly. It's fine. Like it's moving along. And earlier this year, this AI spend was, a real question. I remember back in February and March, combination of things where you had earnings come out for a lot of these companies that were a little bit lackluster. Then in February, you get this DeepSeek announcement, and everyone's like, oh, are we going to need to do the same kind of AI CapEx that we needed to? And this is on the back of these companies really not being leadership since July of last year. And all of a sudden, in the last couple months now, it's like, no, if you're not buying tens of thousands of chips and expanding your AI, data center plans, you're losing. That's where we are back to. The AI trade is the thing that is driving both the U.S. economy and the market right now. There is a great stat that I saw yesterday and this is from yesterday's GDP report, where in the second quarter, there was more economic activity generated from data center build-out than from consumer spending in terms of its net change on the U.S. economy. We've never seen that before. And data center, all of that stuff is a tiny fraction, but the growth rate is so high.
Remember a few years ago we were talking about the industrial demand from Amazon building out warehouses and how all the shopping centers were going to be turned into it's that story on steroids with a different sector.
It is, and I want to get the phrasing on it right, just because it's the magnitude of this is just monstrous. Here we go. AI CapEx, which we define as information processing equipment plus software, has added more to GDP than consumer spending.
Wow.
Like that, and this is the whole thing. The engine of growth right now is AI CapEx in the United States. Everything else is kind of just fluttering around. It's not great. It's not terrible. It's just kind of fluttering out there, waiting for what can happen. Housing, to be fair, is getting pretty bad in some parts of the country. But this is the story. And so the companies that are front and center on it, this is where I get to my idea that it's no longer the Mag 7.
Who are you kicking out?
I'm kicking out Tesla.
Yeah.
They're not really that story anymore.
Yep.
And I'm kicking out Apple.
Yeah. Because
they're not in the AI thing. They're still, huge, obviously. Sure. But in terms of what's driving this market and what's driving the U.S. economy, it's Nvidia, it's Google, it's Meta, it's Amazon, and it's Microsoft.
And Amazon's, we'll see it tonight. Amazon is a bit of a question mark to me there.
Everyone's going to get nervous about, how do things look on the retail side? The retail sites never mattered for
Amazon.
Amazon.
No, I don't care about that. It is, are you competing appropriately with Microsoft on this cloud? Because Microsoft dominated this. But let's go to Meta for a moment here, because they are clearly speaking about artificial intelligence, what they're dubbing super intelligence. They have acquired a few firms. They have acquired a massive amount of talent. But they seem to be just now building their artificial intelligence team, while at the same time telling us that their earnings are growing specifically because of artificial intelligence. I don't really care because they posted 22% revenue growth. So whether you used AI to get that or didn't,
right,
might be a moot point. You grew your revenue by 22% year over year as a $1+ trillion company. That is very impressive in and of itself. I'm just curious, where is that coming from, right? Like, are you picking up all the TikTok advertising that's just disappearing? Is it coming from YouTube? Where are you getting 22% year-over-year revenue growth?
I don't know.
At this stage of the game, your Facebook and Instagram, it's not exactly a new technology.
Like,
you're not growing that user base.
What companies are raising their ad budget by 20% this year?
I don't know. It's fascinating to me.
It's wild.
Now, I think that is certainly boosting the stock today. I think there's another piece of it that is making a bet on this massive increase in spend. I think if they follow through on their plans for 2026, their CapEx spend is going to be 40% of revenue. That is...
Which also, by the way, would be up 200% from 2 years ago. Their CapEx last year was $35 billion and change. They're targeting north of $100 billion next year. Which also then brings us to the question, where is the power for all of this going to come from? Because you can't just be like, hey, let's fire up another nuke in the next 6 months. The last nuclear power plant that was built in the U.S. cost like $20 billion and took 30 years to build. So,
beers or years?
Both.
Yeah. The last time we were talking about power generation like this, it was EVs. And we were seemingly far more obsessed about it then. It was like, where is this money going to come from in order to power the grid to charge all these electric vehicles? And it turned out we didn't need to because nobody bought the electric vehicles. But this doesn't seem to be slowing down on this expansion. So in any case, when it comes to Meta, that revenue growth was incredibly impressive.
And this, by the way, this was from, I found this on X. This is from a former Meta employee talking about like the limitations on the build out and everything. And this is his direct quote. If we look at any of the transformers or power equipment or cooling equipment or even the construction or availability of power, there's no way you can get to $150 billion in spend. If you talk about Schneider, which is Schneider Electric, who supplies a lot of power equipment, they're completely full until 2030. They're not negotiating on price. It's basically you're lucky to get an order. Everyone talks about Nvidia, but there are many things beyond Nvidia for this thing. Even if you have the money, you can't spend it. They're going to try to. They guided for $100 billion in CapEx next year, and it's going to be wild.
So in any case, they are using this giant revenue from advertising to power this spend, and their vision for the future said Zuckerberg, expecting AI to power all levers of his business in the future, touted its ability to improve Meta's ads, give people chatbot companions, and assist engineers with coding, spending lavishly to get there. I think just, we need to take a break, I recognize, but that is his vision of the future. Everything that we are seeing so far, in my opinion at least, there are others that would disagree with me on this case, and people that are pretty familiar with Facebook that would say AI is already having an impact. I don't see it, but maybe it is. But that vision for the future is what Meta actually needs to execute on with all this massive revenue increase they're seeing.
I want to talk more about this is. I don't know why, but yesterday afternoon for some reason was just a crystallizing moment in my mind on some of this stuff. And so I want to continue to dig into it, including something you just mentioned. Did you say chatbot companions?
Yes.
Let's discuss that and other uses for AI when we return.
Breaking business news as it happens, only here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Artificial intelligence isn't just the future, it's already shaping how people think about their money. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've put together a new guide called AI in Your Financial Plan. In it, we explore the ways that AI is being used in financial technology, from apps that track spending to tools that can help identify trends. It's a rapidly changing space, and this guide is designed to help you understand some of the potential benefits and risks that AI may present. Want to learn more? Call 800-393-4001 and request your free copy of AI in Your Financial Plan. That's 800-393-4001 or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now. 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Celebrate National Farmers Market Week, August 3rd through 9th. It's the perfect time to explore your local market and enjoy some peak summer produce, sweet corn, juicy tomatoes, berries, and more. Support local farms, eat fresh, and build community. Mass Farmers Market supports more than 200 markets across Massachusetts, growing food access and farm sustainability statewide. Find a market near you at massfarmersmarkets.org. That's massfarmersmarkets.org. Sponsored by Mass Farmers Markets.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Now's a great time to register for the DAV 5K, taking place Saturday, November 8th at Fort Independence on Castle Island. The race has sold out each of the past 4 years, and slots are continuing to fill up quickly. So don't delay. Visit dav5k.boston and reserve your spot, or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th. For this year's DAV 5K, sign up now at dav5k.boston.
So, I want to spend some time talking about AI use cases and where the growth can actually come from.
Hit me.
Personal companions.
Oh, boy.
No, let's discuss, because this is something that Zuck mentioned.
Yep, he did.
As much as I want to believe that humans will find personal AI companions off-putting, we won't.
Okay.
Not in the aggregate. You listening might personally say, I would never just spend time chatting with a personal AI companion. That's fine. Respect to you, respect to the person who chooses otherwise. It's your own life. Go live it as long as it's not hurting anyone else. It's something where all of the information that we have, about how isolated so many people feel today, combined with what we are already seeing before these, customized companions as far as how people are talking to different AI systems and getting themselves into some really hairy situations because the systems are just not ethical, leads me to believe we're going to be heading down the path where AI companions become more popular than we may think. Do they become?
How do I monetize an AI
Do they
companion?
become profitable?
Yeah.
I don't think so, because I do think as much as,
How much would it suck to be a lonely person talking to an AI companion who's constantly feeding you product recommendations?
Or you have to pay for it? I got to pay for my friends?
No, that's not the Facebook. If Facebook's the one to do this, then they are going to discreetly drive this AI companion to suggest that you need more Doritos today.
Hey, AI companion, what do you think I should do tonight? Have you considered going to Buffalo Wild Wings? There's 10% off if you get a dozen wings. No, I hadn't, but now that you mention it, I'd love to. Thank you. Be sure to use the code META when you go.
Yeah, I won't deny that that's a distinct possibility. I think about our aging demographics. I think about a number of different factors that could lead to AI companions being a big thing. I still have questions about how you monetize it. But that, if I'm going to take the other side of Meta's earnings, which were fantastic, no way to debate it, they are spending a lot of money on something that there is not, to me, a real clear vision of what the public-facing future is for this product.
So they're trying, what Zuck is signaling with his memo or whatever he put out yesterday is what he's calling superintelligence, what other people would call artificial general intelligence, AGI, which is the idea that, hey, you're building something that is smarter than humans that can interact across multiple domains, multiple platforms, not even necessarily just in the technological world, maybe, physically, and Arnold Schwarzenegger, might actually be coming for us. That is where Zuck is signaling he wants to go. And his letter yesterday was basically we can see the end in sight, which that's one thing that I don't know that I completely believe. Having spent some time playing around with, a number of these platforms, I can tell you that they are incredibly powerful and fast at things that they do. I mean, they can do things that would take me hours to do otherwise. But you also really have to hold their hand still because they can get stuff wrong. Just as an example, I was poking around on some CPI data, asking for a little bit of help analyzing something, and it couldn't find the data that I was looking for until I had to literally spoon feed it because it couldn't find it in the PDF. And just was having a hard time getting there. That's not really a sign of superintelligence yet.
Yeah, agreed. And I think that's the message is, in my view, Meta's core business is doing amazingly well. They are going to spend a ton of that revenue on developing the next greatest thing, and they have to execute on that for this to be a success story.
Yeah.
It's a big promise. It's not core to their business today. It is very different from attracting advertising dollars, but they are spending as much as almost anyone else on researching how to do it, and so that's what you are betting on with Meta today.
Do we want to talk about Microsoft separately, or have we done enough?
No, I do want to talk briefly about Microsoft separately. So Wall Street Watch is coming up next, and then we'll cover whatever Tucker doesn't on Microsoft.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
The busy week on Wall Street continues as traders assess a whirlwind of second quarter earnings, fresh economic data including core PCE and jobless claims, and trade deals with tomorrow's deadline looming. The Federal Reserve also met yesterday with two Fed governors dissenting in favor of a rate cut. Right now, the Dow is up by about 0.1% or 60 points higher. S&P 500 is up 0.6% or 41 points. NASDAQ up 1% higher or 215 points. Russell 2000 is flat. 10-year Treasury yield up 4 basis points at 4.368%, and crude oil retreating about 0.33%, trading just below $70 a barrel. Impressive second quarter earnings from major AI players. Meta and Microsoft are helping propel the tech rally today. Meta surging 12% higher after the Facebook parent company beat revenue expectations driven by strength in its core ad business. Meta also reported an optimistic third quarter outlook. As for Microsoft, that stock is up nearly 5% and has surpassed $4 trillion in market value after the tech giant reported strong quarterly results driven by cloud services and AI demand. Chuck and Mike will have more on Microsoft coming up here on the show. Meanwhile, Qualcomm retreating 4% despite the chip maker posting better than forecasted second quarter results. Some of the company's business segment revenues came in lighter than expected. Elsewhere, CVS Health posted an earnings and revenue beat for the previous quarter, where the company cited strength in its retail pharmacy business and some improvement in its insurance unit. CVS also boosted its adjusted profit outlook. That stock up by 5%. Norwegian Cruise Lines jumping 11% after the company posted mixed second quarter results, but reiterated its full-year guidance, noting strong travel demand. Beer brewer Anheuser-Busch InBev sinking almost 12% after the company reported a worse-than-anticipated decline in second quarter volumes. Online used car retailer Carvana posted higher profit and revenue in the previous quarter, sending that stock up by 20%. And after today's closing bell, we'll see more Mag 7 earnings from Amazon and Apple. I'm Tucker Silva, and that is Wall Street Watch.
Can I give us a weird gold rush analogy here?
I mean, yeah, always.
So if we're going to compare the AI drive to the gold rush, Meta is, in my mind, trying to strike gold. They're taking a bunch of revenue.
Wasn't everyone in the gold rush?
No. Like, people made a ton of money selling shovels.
Got it. Okay.
Microsoft is making all of their money right now selling shovels. They're also trying to strike some gold, but they're selling shovels. They're selling space on their servers to people who are trying to develop the next latest and greatest.
Are
AI.
they?
You don't think so?
No, they don't need. Okay, so
I'm looking at them and putting them in the same pit as Nvidia, where
I don't think so.
No, because I mean, Microsoft is certainly developing tools that they want to.
They have products they're selling.
They do. They are developing those products and trying to sell them. They're trying to develop, better and greater AI tools for Microsoft Office Suite products. But it seems to me where they're making all their money right now is on their cloud unit, which is just selling space to run these models to other companies. So they're trying to do both, but I think they're making all their money by selling shovels right now.
Maybe I just need a better understanding of what's in cloud. Okay. I don't know where, I don't know where Copilot revenue ends up.
Yeah.
Maybe that's in cloud. I don't know.
So their Azure cloud business grew by 39% in the most recent quarter. I take that to mean that they are now selling massive amounts of data center capacity to other businesses that are running their own artificial intelligence products on Microsoft's cloud. I could be wrong about some of the specifics there, but that was my takeaway from the analysis of Microsoft earnings so far. Because I don't see anything. You have spent a fair bit of time with Microsoft's own AI tools, and I think they've generally been found to be fine, but not the most cutting edge.
So I guess what I'm trying, I don't know what's included in cloud.
Sure.
I don't know. like, who else is there, I guess, that needs to be on Microsoft's servers?
I'm not sure I understand the question, John.
Well, OpenAI is building out a bunch of their own data centers.
Yep.
Meta's got their own. Amazon's got their, like, who are the people paying Microsoft billions of dollars for?
Oh, I think every other company out there. Like, if you're Goldman Sachs, who's right now trying to create your own in-house artificial intelligence system, if you're JP Morgan, if you're any of these other companies.
You think they're building in-house?
Oh, I know they are building in-house.
Okay.
Yeah. So if you're any of these other businesses who are attempting to build in-house artificial intelligence systems because you don't want your data on ChatGPT, which is probably any defense company, any financial services company, anybody that handles private data, then I would think you're going to Microsoft right now. And that's where I think they are seeing these massive build-outs in.
Why do you think Microsoft instead of like AWS?
That was kind of my question. Is, okay, if Microsoft's picking all of this up right now, and again, like with Meta, there is little to criticize in Microsoft's earnings most recently. But if all of the growth is coming from this piece, then what makes you special compared to AWS, Oracle, and all these other companies that can do the same thing? And I think the answer might be that Microsoft legitimately does this better than anybody else.
Can we just, before even going further, just talk about how quickly these companies are still growing their revenue at their size?
Yeah.
I mean, you look at Microsoft, just as, like, again, kind of the first example here. And Microsoft, again, both these companies, you're seeing basically 20% year-over-year revenue growth. Revenue growth. Like, it's re-accelerating for them.
Yeah.
And it's kind of wild. I mean, like, look at it by segment. So you mentioned Azure. So 39% revenue growth there. It's up from 33 in the previous quarter. Dynamic products and cloud services. Again, like, I don't know what the heck goes into these categories. Why was that not just on Azure?
Yep.
Okay, fine. Up 18% compared to 11. Microsoft 365 Commercial Cloud up 18 compared to 12. 365 consumer products and cloud services up 21% compared to 10. Search up 21 compared to 21. So search is just fine. Windows up 3%, still just chugging along. Xbox up 13% compared to 8. Ultimately, you look at the stuff, like basically anything that is cloud-based, whatever vertical it is for cloud, just saw like a 6 to 10% acceleration in the quarter. It's kind of monstrous.
Yeah.
I mean, you talk about, hey, how do you justify these valuations?
You grow at 20%.
If you start, more than that, I mean, look, if you start like if this is just the first phase, now you're going from, 20 to, 25% growth. Okay, Microsoft then goes from being a $300 billion revenue company to $400 billion. They're no longer 13x revenue. Now they're 10x. If they can do that. Like, I'm not saying they can or can't, but it's kind of wild what we're seeing here. And yeah, these are some of the most impressive quarters that I have seen in a while from anyone. Now, the interesting piece is you've got stocks broadly rallying today. I say broadly because all three major U.S. indices are green right now. The Russell 2000 is still red just because small caps just continue to get beat up.
The companies that are winning right now are $4 trillion companies. Of course, small caps are getting beat.
Well, here's the other thing that's interesting to me. The semiconductor index is currently off 1.7% today. So this is not factoring into, or filtering down to, kind of, if Microsoft is the shovels, these are the picks. That's like, they're not picks and shovels. They're just picks. Like, they're for, the real gritty work. And some of this is on the back of, Qualcomm had a pretty good quarter yesterday, beat up, down 5%. We talked about how ASML guided, hey, we might not grow our sales next year. They're, off 2.5% today, continuing to slide. Broadcom, who's all involved in AI build-outs, down 1%. So I'm trying to reconcile what I'm seeing in semis with what Microsoft and Meta are telling me, because Microsoft and Meta are telling me, guys, we are going to ramp our CapEx through the roof. And I got the entire semiconductor complex basically selling off. And I'm trying to reconcile what that means. Because...
Is it just capacity?
Well, if it is, then you can't actually spend that much more.
Right.
In which case, what are we, what...
In which case, Microsoft and Meta even look more profitable next year because they can't spend the CapEx they want to.
Well, here's the other thing that I wonder about then. And this is just cynical old me, because occasionally I get to these places. Are they guiding that higher CapEx because they know that they can't actually do it?
No, I mean, maybe. I tend to take CEOs at face value. We intend to spend this money. We're going to find any way we can to do it. And Microsoft and Meta will outbid every other person there. So if anybody's going to get the chips, it's going to be them.
Fair point. They do have... It's not even deep pockets at this point. It's like, what's bigger than pockets? It's honestly, it's Scrooge McDuck money.
Yeah. Yeah, I mean, if you are any of the semiconductor manufacturers, you're not exactly about to say to Meta, hey, sorry, but we really got to get this chip to give me Intel this month.
We got to get this chip to Tucker because he needs it.
Yeah. No.
Nvidia is up 0.5% today.
Right.
I mean, you could say, like, hey, it's priced in, I guess, but what gives that the whole rest of the complex can't move? And by the way, you just look at the indices overall, the S&P 500, 260 stocks up, 240 down right now.
Mm-hmm.
It gets to that thing that Brent was talking about in his piece. Hey, the rest of the U.S. economy is fine. The engine that is driving this thing right now is AI. And if that falters at a time when the other stuff is, a little dodgy, when we talk about housing and the labor market still not on the strongest footing, that's where you've got problems. But the AI thing is just so strong right now. It's a monster.
We got to take a quick break. When we come back, do we want to start getting into data, or do we want to talk about Apple and Amazon coming up tonight?
Let's just stick straight earnings here.
Yeah. Apple and Amazon and their earnings that are expected after the bell today. That's next on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now. 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Celebrate National Farmers Market Week, August 3rd through 9th. It's the perfect time to explore your local market and enjoy some peak summer produce, sweet corn, juicy tomatoes, berries, and more. Support local farms, eat fresh, and build community. Mass Farmers Market supports more than 200 markets across Massachusetts, growing food access and farm sustainability statewide. Find a market near you at massfarmersmarkets.org. That's massfarmersmarkets.org. Sponsored by Mass Farmers Markets.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street, right here on the Financial Exchange Radio Network.
All right, Apple's going to be reporting earnings after the bell today. And Apple stock has not been in a great spot this year. They're down about 17%. Reasons why, take your pick. They don't have the most captivating AI strategy. They're potentially exposed to tariffs. Remember, they were moving a bunch of their shipments of iPhones that are going to be coming to the U.S. from China to India.
25% tariff.
And India is now being threatened with a 25% tariff that may end up lower and exclude smartphones anyways, so it might be a whole bunch of nothing.
Oh, it does?
It might. Like, we don't know. I mean, the China tariffs excluded smartphones.
They did. Okay. Yep.
You know, it's. Can we talk about the Brazil ones that were announced yesterday? No, let's not. Let's do that. Let's do that. Let's do that later. We got to stay focused here. So they've also got this lawsuit that's going on between them and the federal government, with the federal government saying, "Hey, stop accepting a bunch of money from Google to make it the automatic search engine."
There's
some
threats
stuff
to
going
Apple's
on.
business. Yeah.
Questions about, hey, they appear to be losing market share in the U.S. China's got, kind of a questionable relationship as far as how domestic demand goes there. So their earnings tonight are going to be interesting to watch.
Expectations are low, I think.
I almost feel like a lot of investors at this point kind of view Apple as almost what it finally has developed into, which is like a boring, mature company at this point, with still some high risks that are out there.
Yep.
It's unlike telecoms. There's nothing there that necessarily ties you in quite the same way. You can say the Apple ecosystem does, and that's true, but we are seeing some market share fluctuation on the margins. And again, it's not to say that Apple's a bad company. They still print money hand over fist.
Yep.
If Microsoft has Scrooge McDuck money, Apple is like Scrooge and the whole family money.
Yeah. I tend to think that the concerns about their lack of AI success are overblown, mainly because I don't think that anybody else has a great consumer-facing AI tool for smartphones generally, and so what exactly is Apple missing out on? But those tariff threats are real. The other threats to their business are real. And it is just a mature tech company that does not have a lot of great avenues for massive growth at this stage. And so those are real questions. As we talk about AI, Chuck, I want to get to one big thing, which is it's the last day to get a copy of the Armstrong Advisory Group's new guide. It's actually about artificial intelligence, AI in your financial plan. We go into a whole bunch of details of where AI is starting to show up in the financial services industry. If you're curious about these developments and what we are starting to see when it comes to AI and managing your financial strategy, give the folks at Armstrong a call. The number's 800-393-4001. Free guide on AI and your financial plan. You can get it by calling us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
We've also got Amazon reporting after the bell today, and with them, I think, obviously, look, you got the two core businesses. You've got the retail side, you've got Amazon Web Services. You've also got, by the way, this advertising business that is now freaking huge.
Yeah.
In terms of...
You forget about that, right? Like, you don't really think of Amazon as an advertiser. Now. And it's not just, obviously they have Prime Video and stuff like that, but it's not just coming from there. It's coming from all of the ads that you see and sometimes ignore on Amazon.com itself, right? All the sponsored, all the sponsored products that are on there, all the ads that are on the side. It is a big, big business these days that has been taking away a little bit of revenue from those traditional online advertisers.
Given what we've seen everywhere else in earnings season this year, my expectations are AWS probably going to knock the cover off the ball.
I mean, it had better given what Microsoft just did.
The retail side could appear a little sluggish.
Yeah, from what we read, I mean, their Prime Day sales did not go over terribly
Nothing horrible.
well.
It's going to be fine. Like, again, it's a low single-digit margin business. It doesn't really matter.
Yep.
It's strange to say that like $100 billion, a quarter business doesn't matter, but it doesn't. That's not why people own Amazon stock at this point.
Right.
And the ad business, this one's going to be interesting, given what we saw from Meta with how strong their ad sales are. Question that I have, hey, is this something that's happening across the board, or is Meta taking market share somehow? Like, if Meta's taking market share, then maybe you point to, hey, maybe there is some truth to their AI integration being, a better selling point and something that's really driving more activity there. If it's just, hey, everyone's spending through the nose on ad sales right now, okay, that's interesting. I'd be curious, why that's the case.
How long can it last?
But it's an interesting data point.
Yeah.
Like, okay, like we might have something interesting there. Let's take a quick break. We got a whole bunch in hour 2. We're talking Fed, PCE, and much more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. please visit dav5k.boston. That's dav5k.boston.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide for the month of July, AI and your financial plan. Paul, one of the big areas that is a pain point for a lot of folks is working on their budget. It's kind of the step one for your financial plan. And I know there's a number of tools that are starting to incorporate AI in their budgeting plans. How is this starting to work and benefit folks?
Yeah, like you mentioned, Mike, it's an area which is really difficult. You ask a lot of the clients that we meet with on a regular basis, how much do you spend on a monthly basis? Simple question, but hard to come up with that answer. What these AI tools can do is aggregate all of your total spending together, categorize different areas, and use that data to try and project what you may spend in the future. This is a critical step in the retirement planning process to get a sense for what are you spending today and can you afford to spend that much in the future. It is important to note, certainly, that there are drawbacks that come with it too.
Yeah, talk to me.
This is a technology that's in its early stages, and it's only as good as the data that's fed to it. There can be some issues sometimes with properly categorizing certain types of expenses over time, and as such, you have to be very careful when you're using this type of technology and perhaps vet it against your own assumptions through that old school spreadsheet fashion as well.
It's always a good idea, but especially when we're talking about brand new emerging technologies. Folks, the brand new guide from the Armstrong Advisory Group is all about AI and how it could affect your financial planning strategy. If you would like to get your free copy, call the Armstrong Advisory Group at 800-393-4001. The guide again is AI and your financial plan. It's available at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking things off today, Chuck, Mike, and Tucker with you. And we got markets kind of in a weird spot, to be honest. So here's what's wild. Under the surface, the last 3 days, including today, it's been kind of ugly. There's been far more losers than gainers overall. It's just the big stocks have been moving up, and so it's kind of masked this. Despite that, the S&P 500 in the last 3 days, including what we've seen so far today, is up 2 points. So it's just been kind of ugly, feeling a little turning point-ish maybe just because, let's be honest, this run just hasn't been stopped for the last 3 months. It has been a straight-up rocket ship aside from like a few days where there were, 1%, 2% pullbacks at most.
Right.
So you look at today, and yesterday after the bell, you had Microsoft and Meta report earnings, and they knocked the cover off the ball. As it stands today right now, Meta is still up about 11.5%. Microsoft, who was up about 9%, now up about 4 1/3 as they're coming back to earth a little bit. But Meta just, again, when you're like a $2 trillion company now and you're up 11%, that's going to lift indices pretty strongly. But here's the thing. The Dow, which doesn't include Meta, is off 15 points. The S&P, which does, and includes Microsoft, is up 25 points, less than 0.5%. So you say, okay, you got these two huge stocks, adding $400 billion in total market cap, and you're only up that much. The NASDAQ only up 1/3%, up 72 points right now. And you look at this, And it's because in all your major indices or all your major exchanges and indices, you basically have more stocks down than up. Meta is trying to carry the day, but it's got a lot of pull against it, even in tech, where the semiconductor index is off 2.1% today now. So that
Nvidia is barely up right
Nvidia is barely up. I'm trying to reconcile what's happening here because you had these monster earnings reports from these companies telling you about all their AI capex, and semiconductors are just getting absolutely bopped on the head and just left behind right now. So I'm trying to reconcile what's going on with that. 10-year Treasury is seeing money flowing into it, down 4 basis points to 4.336%. We've got gold on the move as well. Gold is down. Well, it was on the move. Now it's not. Now it's down $2.90 an ounce, so off 0.1%. Oil is down 86 cents a barrel to $69.14 on West Texas Intermediate. And so it's kind of this weird day, and this is before you even get to what happened yesterday with copper, which fell about 20% on the day after the copper tariffs were unveiled officially yesterday and excluded refined copper from those, which no one was expecting. And so copper prices got whacked because basically there was, in the short term, an excess of flow trying to get into the U.S. to front-run the copper tariffs, and now that you don't need to pay them for refined copper, the flow is reversing and basically heading back overseas. So it's kind of, there's all kinds of weird stuff going on. We also, just now as we speak, got an announcement from the president. He spoke with Claudia Sheinbaum, the president of Mexico, and agreed to extend a 90-day tariff, not pause, but the same deal that was in place, 25% on baseline non-USMCA goods, 25% on cars, 50% on steel, aluminum, and copper from Mexico. So that is where things stand on that side of things.
Still nothing concrete with either Canada or China, which are the two other largest trade partners other than Mexico.
Yeah, Treasury Secretary Besson said this morning he thinks that there's a deal to be had with China, whether that means tariffs coming down, something else happening. We don't know. We have no indications as to what it might be. But we've got that one is through August 12th, so there's about a week and almost 2 weeks before there's something that needs to happen there. Let's talk a little bit about what happened yesterday. Jay Powell and the gang got together and said, hey, we're going to decide what short-term interest rates are, and they kept them the same.
They did.
There were, as expected, 2 dissents from Michelle Bowman and, what's Waller's first name? I'm
Christopher.
Christopher, that's right. Not Christopher Walken, but Christopher Waller. Mm-hmm. Distant cousins, probably. And basically, what I found interesting was not that there were these dissents, because we talked about, what that might mean.
That was anticipated.
The interesting thing to me was Jay Powell's press conference.
Okay.
Because we got Prickly Jay. We got Porcupine Jay. And my favorite quote from him was he was asked by someone, hey, inflation is low right now, unemployment is, low right now, and there's the chance that, the economy is weakening. Are you going to look through weak unemployment in order to, potentially cut rates? And he said, no, what we're looking through right now, we're looking through high goods inflation in order to not raise rates. Like, straight up was like, no, I'm looking at the opposite. Now, I think that's him just trying to make a point, which is, I'm my own dude. And I get that, anytime someone comes in and tries to tell you how to do your job, whether you're running the Fed or running a car wash, you're going to be like, I'm going to do it. Like, let me take care of this. So it's not to say that Powell's right or wrong, but I understand the impulse there. The next few months are going to determine whether or not that's the right impulse from Powell. Because here's the thing that I think we do have to also consider. We talked about in the GDP report yesterday that real final sales to private buyers have declined for the last 3 quarters, which is a good sign of kind of underlying trend GDP. And I think the big risk that Powell potentially is taking is that in trying to maintain the Fed's independence, is he going too far in trying to show that he's independent? And does that end up making the wrong decision? There's no evidence of that yet.
Yeah.
And I give Powell the benefit of the doubt because for the last 2 years now, he's been really good and his team has been on it.
So I do come up with a lot of reasons why, if I were Jay Powell and the Federal Reserve Board, I would want to be hawkish on rates right now. I mean, one, if you lower rates right now, there's a lot of people who are going to say you're just caving to the president. So maintaining your independence. Two, if I had to choose, if I had to choose a screw up right now, I personally would rather see prices move up.
Wow, we're getting a real life trolley problem within Mike's head.
But like, I do think that returning to a period of higher inflation would be more damaging.
No one likes it
to the Fed's credibility than a period of higher unemployment. Because we just did that.
I agree.
And so like you can excuse a screw up to the unemployment. It's really tough to excuse a repeat of inflation. The flip side of that coin is if you do screw that up, you do get higher unemployment and a recession as a result of higher interest rate policy.
You're going to be blamed.
Just played right into President Trump's hands. And so it is again.
Which is also why I don't think he's going to actually fire him.
Yeah, it's nice to have a scapegoat.
He's a very useful scapegoat.
Yeah. But in any case, like if I look at that, I would say, look, the Federal Reserve, for those reasons, is right to have a bias towards higher interest rates. Not to mention, like, unemployment is low. You're having big deportations that could affect the unemployment rate further. Like, there's plenty of evidence to justify what they're doing right now. But beyond all of that, if your third goal here is to justify your independence, I don't think you move on rates. You keep them higher.
This dovetails nicely into a discussion of the PCE inflation data that we got this morning. So let's take a quick break, and when we come back, we'll do PCE, and also we got more unemployment claims data. We'll discuss
and trivia.
I was getting there.
No, I wanted to interrupt you.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Artificial intelligence isn't just the future, it's already shaping how people think about their money. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've put together a new guide called AI in Your Financial Plan. In it, we explore the ways that AI is being used in financial technology, from apps that track spending to tools that can help identify trends. It's a rapidly changing space, and this guide is designed to help you understand some of the potential benefits and risks that AI may present. Want to learn more? Call 800-393-4001 and request your free copy of AI in Your Financial Plan. That's 800-393-4001 or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now. 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And seeing that Amazon reports after the bell today, we'll do a little bit of Amazon trivia here for you. On July 5th, 1994, Jeff Bezos founded the company, now known as Amazon. Bezos initially chose a different name for his company, but changed it to Amazon before launching the online bookstore. So, trivia question today. What was Amazon's original name? Once again, what was Amazon's original name? Be the seventh person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the seventh correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
At 8:30 a.m. this morning, we received two different pieces of data. Personal consumption expenditures, inflation data, and jobless claims data. Which shall we begin with?
Inflation.
So, core PCE came in at 0.3% for the month. Annually came in at 2.8%. Headline, 0.3% for the month, 2.6% annually. Both of those represent accelerations from the prior month and
the prior few months. These are the highest inflation readings we've seen for either CPI or PCE since January, February timeframe.
Yes. And I think gets more at, kind of what Jerome Powell was talking about, which is, look, like we've got inflation kind of creeping back up a little bit here. Mm-hmm. It's not, a 4-alarm fire. It's probably not even a 2-alarm fire, but if you've got core PCE at 291 for the last year now, and you're sitting there saying, hey, I really don't want a 3 handle on that because the only thing that's keeping headline down is the fact that gas prices are lower than they were last year, which you can never guarantee for too long. Hey, I probably don't want to be cutting rates into inflation that's been running back up the last couple months, even at a modest level.
Now, to be clear, they did not have this data at the time of the meeting itself. So when they decided on interest rates, this data had not been released. By the time he was giving his press conference, it hadn't been released to the public, but it likely had been released to Jay Powell. So he knew what this data was going to look like. They generally, I believe, get it a day before the general public does. So I think lends credit to what he was speaking of, which is, hey, we are holding interest rates steady here by kind of looking through what could be temporary price increases. Again, I think that comment gets a little bit more justifiable, like you said, with this data release of maybe just temporarily, but accelerating inflation right now.
Yeah, we'll have to see how the next few months end up shaking out here, but ultimately, at this point, we're starting to see a very modest uptick in the inflation data. It's nothing that is crazy. It's nothing where you have to, be running around, like we were back in 21 and 22 saying, hey, what the heck's the Fed doing?
Right.
But you'd like to be seeing inflation heading back down closer to 2 rather than, bouncing back up towards 3. And unfortunately, we're seeing a little bit of a rebound here, and we'll just have to see how long it goes and how much higher it ends up moving.
Mm-hmm.
The jobless claims data, on the other hand, is nothing short of fantastic. What we saw, 218,000 weekly jobless claims, up from 217,000 last week. Both of those are not just really good numbers like in a vacuum, but they're below last year by pretty significant margins. The continuing jobless claims came in at 1.946 million, the exact same place they were in last week, which also is not, in this case, not ideal, but nowhere near the level of concern if this were, starting to rise closer to 2 million or north of that, and representing closer to, an 8 to 9% year-over-year gain. So ultimately, in late May and early June, we said, hey, there's an uptick in continuing claims that's happening that's a little bit concerning, and we're starting to get that same seasonal pattern on weekly claims. We'll have to see how these resolve. The weekly one we thought would resolve pretty cleanly to back to, in this seasonal pattern, and it has. It's even gotten better than that, so I think the weekly initial claims are really good. And the continuing claims are back in line with, a modest 4 to 5% increase over last year, but nothing to write home about. And so, if anything, I think that you can point to the labor market in the last month and say it's gotten better.
Yeah. Again, this might not ring true to, those 23-year-olds that are listening right now who have a recent college degree. We recognize that has gotten pretty rough out there. But, from two different perspectives. One, the unemployment rate, which we'll get a new reading on tomorrow, and we'll see where that goes. But that is holding low. But that can happen for a number of different reasons, right? You can have people dropping out of the labor force. You can have deportation. Any number of things could lower the unemployment rate besides hiring. This is an indication that layoffs are actually pretty reasonable right now. And so I would expect, all else equal, to be seeing a fairly solid jobs report tomorrow.
Yeah. Now, again, you never know what you're going to get. I mean, it's something where
they're different surveys. They talk to different businesses.
When's the last time that we saw a big downside surprise, though? It's been a while.
Yeah. Yeah, it has.
I mean, I got to go
Where are
back.
Expectations for the unemployment rate right now?
Oh, good question. So for tomorrow, we're expecting to see 110,000 jobs created. Unemployment rate expected to rise very modestly from 4.1 to 4.2.
We've been at 4.3 over the course of the last few months, as high as 4.3 over the course of the last few months.
I mean, the big thing that still is wild to me is that we have not had a negative payroll number since December of 2020. It's been a while. And, it's not to say that'll continue forever because every streak gets broken eventually. I mean, remember, we had a monster streak that ran through the 2010s until COVID broke it.
Mm-hmm.
And so I think we'll have to see, kind of how things go. But ultimately, the labor force data, the new stuff, has been good. I know we got a JOLTS report on Tuesday that was weaker than people were hoping for, but JOLTS
specifically
is also,
on the opening side of things.
And JOLTS is also delayed by a month. It's a month backward looking. So I think...
To be clear, this report that we get tomorrow is also backward looking, but it's more like 2 to 3 weeks backward looking.
JOLTS is looking back 2 months, not a single. So the JOLTS report that we just got was for June, whereas we're going to be getting the July jobs report tomorrow. I don't know why JOLTS runs 2 months out of date when, look, if we're being completely honest, there's a really, really strong correlation between the JOLTS job openings data and what Indeed shows as far as its job openings. And if you want a good idea of where JOLTS is going to be going, you can look at Indeed and generally eyeball it, and it might ping-pong around that number a little bit over, a month or two. But the trend that you see for the Indeed hiring index tends to match what we see in JOLTS over, any meaningful period of time, 3 to 4 months or longer. Taking a look at markets as we head towards the bottom of the hour, the Dow is off 127 points, S&P now up 17, NASDAQ up 138. So, again, kind of this divergence that's happening out there. Russell 2000 down 0.5% also, just for good measure. Let's take a quick break. When we come back, we got the trivia answer and Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Busy week on Wall Street continues to chug along as traders assess a whirlwind of second quarter earnings, fresh economic data, and trade deals with tomorrow's deadline looming. Some breaking news from President Trump, who posted to social media about 30 minutes ago that the U.S. has extended the tariff deadline for Mexico by 90 days. Following a phone conversation with Mexico's president. Right now, the Dow is off by nearly 0.2%. S&P 500 is up 0.3%, and the Nasdaq is up 0.75%. Russell 2000 is down by 0.6%. 10-year Treasury yield down 4 basis points at 4.334%, and crude oil down over 1.5% lower, trading at $68.80 a barrel. Impressive second quarter earnings from major AI players. Meta and Microsoft are helping lift the S&P and Nasdaq. Meta shares up by 12% after the Facebook parent company beat revenue expectations driven by strength in its core ad business. Meta also reported an optimistic third quarter outlook. As for Microsoft, that stock is up nearly 5% and has surpassed $4 trillion in market value after the tech giant reported strong quarterly results driven by cloud services and AI demand. Meanwhile, CVS Health posted an earnings and revenue beat for the previous quarter, where the company cited strength in its retail pharmacy business and some improvement in its insurance unit. CVS also boosted its adjusted profit outlook, sending shares up over 2%. And after today's closing bell, we'll see more Mag 7 earnings from Amazon and Apple. I'm Tucker Silva, and that is Wall Street Watch.
We're now joined by the one and only Todd Lutzke from the law firm of Cushing & Dolan. Todd, how are you today?
I am never better, and you?
Doing well. Todd, just in general, we don't have to go in depth on exactly what they do, but if someone's trying to build an estate planning strategy in advance to protect assets from long-term care costs, what kind of tools are available, and how good are they at protecting those assets?
So I would say the great news about that is there's really not a lot of options, right? It's not like picking paint. Really the best way, and really one of the only ways to protect in advance, is to use these irrevocable income-only Medicaid trusts that we've talked about many times on the show. They really do offer the best flexibility, control over the asset. Because remember, I say I'm 65 and healthy. I don't want to be, giving away my stuff. So you put it in a trust that you can still control and enjoy what's in there to a large degree, and get that all-important 5-year clock running to get these assets protected from the cost of long-term care in the future. And so that's really the best way to do it. Giving them away is not a great idea.
Let's say that you haven't done any kind of advanced planning. How much more limited are the tools that you have if you have to conduct emergency planning?
Well, they are limited, but they exist, and I think that's the most important message, right? These certain assets are treated differently. Some assets are countable last minute, some assets are not. So like a rental versus a primary residence, a life insurance policy versus maybe jointly owned accounts versus, having the ability to shelter assets last minute and avoid the 5-year waiting period. And by the way, the rules are different for married people versus single people. But I think the message is don't just, write a check. Even if you've used a trust, there's going to be things outside the trust that remain at risk that need to be dealt with when you're faced with nursing home care. And if you've not done a trust, there's a lot more outside the trust that or outside just at risk in general that need to be dealt with. And so if you want, what you do is you get this guide that we're giving away, and I think that's really the best approach. It's last-minute Medicaid eligibility planning, and it helps you understand what these options are for you. If you're married, if you're single, it tells you about what assets are countable, what are not. Are there certain things I can transfer now and avoid a 5-year waiting period depending on your situation? So I think that's really the message. As you said, Chuck, are there things that you can do? Yes. Get the guide, the end of the month, learn how to do these things. Obviously, we can't explain them all on the radio. The number is 866-848-5699 or legalexchangeshow.com. Last-minute Medicaid eligibility guide, 866-848-5699 or legalexchangeshow.com.
Mr. Lutsky, thanks so much for joining us.
Thank you. Always a pleasure.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Well, in the previous segment, we asked you the trivia question, what was Amazon's original name? That would be Cadabra. Amazon, originally named Cadabra, was founded in the converted garage of Bezos' house for symbolic reasons and was renamed to Amazon in November of 1994. John from Woonsocket, Rhode Island, is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to John. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, let's talk a little bit about Ford. We didn't get to cover their earnings yesterday, but I wanted to, just because another company kind of giving us an indication of, hey, we're doing okay-ish, but we're feeling some pain because we're going to have to pay $2 billion in tariffs this year.
I'm way oversimplifying this, but what happened in the most recent quarter was that Ford was unable to make any money due to tariffs.
Yes.
They lost $36 million, and it had $800 million in what was the tariff impact for the quarter? The tariffs lost $800 million during the second quarter.
Yeah.
You would have made over $700 million, but you paid tariffs. That was the answer from Ford.
And
just a pretty discouraging answer.
Well, and obviously, look, Ford's going to do what it can to try to figure out how to source materials more cheaply and this and that.
For those that aren't good at math, $800 million, if that were to hit every quarter, would be a lot more than $2 billion.
Correct. So they do think they're going to get better at this and sourcing, whether it's more domestic alternatives or finding ways to cut other costs and things like that. They're going to see an improvement, but it's going to be something that they have to deal with, and it echoes what we heard from GM earlier this month as well.
The state of play here is immensely complex for these companies. Obviously, they're going to do what they can to manufacture more in the United States, but if you
don't just spool up overnight.
What is it, Jim Farley? If you're Jim Farley, how willing are you to spend hundreds of millions of dollars in spooling up manufacturing in the United States when you just had another suspension of tariffs on Mexico, or at least a continuation of the existing deal on Mexico? You don't know how that's going to play out. At the same time, it is now a lower tariff barrier to import a car that is fully manufactured in Germany into the United States than it would be to manufacture one in Mexico and send it to the United States.
Or South Korea or Japan.
Right. Several big auto manufacturing hubs where it is now cheaper for those foreign automakers to sell their product into the U.S. Cheaper is not the right word here, but a lower tariff barrier than it is for Ford to do so overseas. Now, again, not a one-to-one comparison because certainly Ford is not manufacturing most of their vehicles fully in Mexico. It's this part, that part, but that's the state of play right now, and I can understand why those CEOs are concerned about how they're going to compete.
Let's take a quick break here. When we come back, we'll do a little bit of stack roulette.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Artificial intelligence isn't just the future, it's already shaping how people think about their money. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've put together a new guide called AI in Your Financial Plan. In it, we explore the ways that AI is being used in financial technology, from apps that track spending to tools that can help identify trends. It's a rapidly changing space, and this guide is designed to help you understand some of the potential benefits and risks that AI may present. Want to learn more? Call 800-393-4001 and request your free copy of AI in Your Financial Plan. That's 800-393-4001 or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix. Lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Celebrate National Farmers Market Week, August 3rd through 9th. It's the perfect time to explore your local market and enjoy some peak summer produce, sweet corn, juicy tomatoes, berries, and more. Support local farms, eat fresh, and build community. Mass Farmers Market supports more than 200 markets across Massachusetts, growing food access and farm sustainability statewide. Find a market near you at massfarmersmarkets.org. That's massfarmersmarkets.org. Sponsored by Mass Farmers Markets.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required. Just sunshine, soft sand, and that warm island vibe. Craving a break? Plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
Couple things I want to get to in Stack Roulette here. Piece from the BBC. Starbucks ditches pickup-only stores as they, quote, lack warmth. So these are the ones where
you don't get to talk about Starbucks. You don't drink coffee.
It's fine. I know how to pick stuff up from a store. So this is actually something where my initial reaction was, well, that sounds dumb. But my second reaction about 5 seconds later was, you know what? Maybe there's something to this.
Okay.
And what I mean by this, so Brian Nichol came over from Chipotle, what was it, about a year and a half ago now?
Sounds right. I could be wrong.
Anywhere from 12 to 24 months ago.
Okay.
And Starbucks, again, I'm not a coffee drinker, but I occasionally wander into their stores because I'm lost. And what I have noticed in general is there's usually a huge line of people waiting for something.
Yep.
The wait seems to be pretty long. There's not a ton of places to sit in a lot of these stores, and the overall vibe has just gotten kind of industrial, like everything else today. It's like
transactional.
It's just
and the reason this is the case is because most people are not going up to the counter to order their drinks. I do it when I've got my kids in tow. We'll go up to the counter to buy our stuff, but otherwise I'm ordering on my phone. And what do? You line up near the pickup counter, and you're right. There is usually a pack of decaffeinated
humans,
wolves, waiting to pick up their drinks there, and it's not the friendliest place. My question is, does closing these fix that or make it worse?
Well, I think that he's probably going to do something to the stores that have seating to try to make them more welcoming, because one of the things he says, look, the vibe is wrong. And we've gotten away from why people wanted to come into our stores to begin with, which was not just, hey, I'm popping in to get something and leave immediately.
Yeah, it was to sit there on your typewriter as a hipster in Brooklyn and...
typewriter?
Yes. They didn't even need a Wi-Fi password.
People do that.
Yeah.
People do that.
Yeah.
And...
I'm not talking about 100 years ago. This was like 3 years ago.
There's something to this. Like the vibe and the style of a brand does matter, and the vibe is just wrong, or it has been wrong at Starbucks. And I think this is part of this. Now, is this going to help fix everything? No. But I do think this makes some sense.
I love it.
That they're... Which part do you love? That they're closing the pickup only stores?
They're admitting their mistake and they're going away from this.
Tucker's got my
going
back.
back to their roots. Go back to your roots and be a coffee shop again where people meet up and hang out. Not be like, oh, where's my coffee? Oh, let me sort through the 23 different coffees on the counter.
That's
here.
my dude.
Ugh. It's just gross.
I'm just not convinced that people want to sit down and talk to others in 2025 over a coffee.
Well, fine. You can Snapchat each other over a coffee.
Yeah, maybe I'm wrong. And you know what? If you relocate and redesign the store so that there's now seating in front of the pickup area, maybe that does spark a different feel to the store. I don't know, but yeah, to me the problem with all of this is they've recognized there is some sort of problem. I don't know that I've concretely heard from anyone what the problem seems to be and how we fix it. I mean,
the vibes are bad.
The vibes seem to be
bad. The vibes
bad.
are bad.
So I have noticed that they are trying to push their people to be much cheerier and engage in conversation with their customers. I think there's been some menu problems where there's just too much stuff on the board and too many customizations. So they've been trying to fix that. We'll have to see. Investors, by the way, were initially pretty excited about the turnaround story when Brian Nichol talked to investors earlier this week on their earnings call. It's since given all that up. So the stock's down a good 2% today, and
looks like it needs a coffee.
Back to where it was prior to the earnings call, and actually lower than it was prior to the earnings call.
I have one more story that I'd like to cover.
Hit me.
This one really caught my eye. From Bloomberg, this is all over now. I don't know who had it originally. China summons Nvidia over H20 chip security days after U.S. talks. And I had kind of a really interesting thought go through my head. What if after all the hullabaloo of, hey, we're going to, make these chips available to China because Jensen really wants to sell into China and it's a huge market for them. What if China just goes, we're good. Not interested.
It seems unlikely to me. It just doesn't seem like their own
This
chip
is a
industry
warning shot, though.
It is, yeah. It's a warning shot that's, hey, we're not sure we can trust Nvidia's chips.
I don't think it's that.
No.
Do you think China knows that there's tracking stuff in Nvidia's chips? Okay. This is a warning shot based on the trade negotiations that are going on right now, which is another thing of, hey, previously we said no more rare earths unless you get these tariffs down to an acceptable place.
Yep.
The engine that's driving the U.S. economy right now
is
semiconductors, specifically Nvidia. You got to do more on that deal, otherwise we're not buying the chips. That's what it feels like to me. And
could be.
And we've seen this before with China, by the way. In February, the whole DeepSeek thing was right before all of this kind of kicked off. Was not an accident.
Yeah.
So I think there's some meat on that bone because this is what China does with all international companies whenever they have, something that they're trying to resolve elsewhere. Oh, we're going to start a probe of, these companies until we get what we want. And it's usually not just what the probe is about.
Yeah. I want to talk about autonomous trucks, and I have a question for both of you, which is, does it seem like we're talking about autonomous driving in 2025 a lot more than we have any time in the last several years?
Yes.
Probably, I'd say any time since 2018 or 19.
Tesla's announcing their new expansion and their promises into, was it Austin that they're testing this out, or is it Dallas?
Austin, and recently they announced they're expanding into San Francisco, but still a very small number of vehicles.
So apparently this has been going on for a while, but Aurora Innovation says that their driverless systems are now able to allow them to use long-haul trucking drivers between Dallas and Houston. They've been driving those highways at night. The next step that they're going to attempt is from where was it? Was it New Mexico and Texas, which is typically a 16-hour, between Phoenix and Fort Worth. Get the story straight. Typically, a 16-hour trip requires 2 drivers to complete it if you're going to do it nonstop. They're saying, hey, we're going to be attempting to do this via autonomous truck driving. On the surface, like the self-driving technology that's out there, you can see how it would be quite conducive to truck driving because of the number of miles of highway driving. I do get a little bit curious about how they handle everything else that goes along with truck driving, like navigating to the warehouse and navigating those other streets. But, honestly, Waymo's able to do it fairly well on all sorts of city streets. If you have an autonomous truck that can do a good portion of this, you can see what the push would be from shippers of all sorts to cut out that driver.
There are a lot of people that make their living in trucking.
A ton.
If this becomes a real thing, problems.
Yeah. It won't be immediate, and you won't have,
it's not going to be unimmediate either.
It could be pretty quick.
If the technology starts proving itself out,
yeah,
we're not talking about like 3 decades.
Yep.
We're talking about like 5 years.
Yeah.
I don't know. I've been saying that a lot lately. We're going to take a quick break. We got the jobs report tomorrow.
I don't know.
It's actually going to be a almost 24-hour break, but we'll see you then, and Mike doesn't know.